I'm Agnieszka Wood, and on today's show, I'm very excited to introduce my very special guest, Gary Portugal. Gary has been a professional trader for 35 years, and now he's still trading, mostly on a swing basis, and also managing his investments. I asked Gary to join us today to discuss his point of view on the topic that most traders are wondering about all the time. Will I ever make it? Welcome to episode number 3, Trading for a Living. Hi, Gary, and welcome to my podcast.
Thank you so much, Agnieszka. Did I pronounce that right? Yes, I think I did.
Yes, you absolutely did. Wonderful.
The first attempt. Wow.
Yeah, you're very good at it. Gary, you started in 1983 as a commodity and foreign exchange trader in New York.
Yes.
Worked all the way up to become a head of European Monetary System currency trading desk in London.
Yes.
And finally became a wealth management consultant not long before you decided not to work for anyone else and trade for yourself. That's pretty much the dream of most traders, right? To quit their job and trade for a living.
Absolutely right. To be able to pick and choose when you work. And
exactly how to spend your time, right? Nobody's going to tell me what to do. Tell me, with all your professional experience in trading, I'm sure you were able to make consistent profit long before you actually started for yourself. What made you wait? How come you didn't make that decision to start trading for yourself years earlier?
I think, to be fair, most of my career was spent market making. And then as part of the market making, I could and did take some proprietary risk, but it was a certain amount of income that I was able to generate from market making. And then I could leverage some of that to take proprietary trading risk as well. And then as markets, particularly say from 2000 onwards, and even more so from the financial crisis onwards, FX markets, and I think all asset markets became increasingly automated and electronic, and it became more difficult to compete basically as a market maker, in foreign exchange in particular. And it became clear to me that I would have to probably rely less on market making income and more on taking proprietary risk. And then I just reached a point where, as we said off air before, I felt like I'd have a better chance of making money if I could trade more selectively, as opposed to necessarily trading every hour of every day. If I could pick and choose my moments and then maybe take more risk in those instances, even if it meant doing nothing for 2 or 3 days after that, that I'd have a better chance of succeeding. And I think also I reached a conclusion that I was more likely to succeed taking risk myself if I was doing it rather than day trading more of on a swing trading basis. In other words, seeing if I could pick out a trend that I felt might last a week, 2 weeks, maybe even a month, mainly a foreign exchange, but also equity markets, interest rate markets,
right,
and commodities. But the key was trying to see if I could envision a move that would happen over time and capture not necessarily all of that, but at least a reasonable chunk of that, as opposed to just trying to day trade every day. And I just felt like the best way for me to do that and trade sensibly, rationally, was just trading my own money. I mean, it's scary in a way in that if you lose, it's your capital. It's not your employer's capital. But the upside is, you really do trade as and when you think it makes sense to trade, and not just because, oh God, I've got to meet my costs. I've got to pay for these computers that I've rented, and
exactly.
I've got to pay for my brokerage and for my charting service, and so that's basically how I ended up, in this doing what I'm doing now. And it's to be fair, it's been a transition. It means in some ways it's a lot. I mean, I still love the markets, but in some ways it's a lot less exciting than it was, being on a market making desk where you're literally in and out of the market all the time, and where you felt there was necessarily, there might have been opportunity every day. This is different. Where I have to say, okay, there may be a handful of times during the week where I have a really strong feeling about where the market's going to go. And not only that, but I think that the move is going to be meaningful, so I can really get something out of it. And
That's
there
so
are
interesting. So it's actually you sort of you're trading less than when you were.
much less. I mean, the biggest difference is the frequency is way less, and that has been so difficult to adapt to. It's taken me time, and I'm getting better at it. I'm still adapting because part of me will never totally let go of what it was like, to be active. It was fun. It was, I thoroughly enjoyed that. But this is totally different. It's not market making, and it's not even short term proprietary. You really, have to be taking somewhat of a view, well beyond just the next 24 hours. I'm not saying that there isn't scope for some short term trading. Of course there is. But I think on balance, you're going to make more if you're looking to capture bigger moves and not necessarily doing the micromanaging that you do on a market making desk or elsewhere.
Yeah, I can compare it to when I day trade, when I evaluate and look back at the bigger picture of, the moment in time that I trade a momentum stock, and then I look at the bigger move, it's just so revealing, like how much you can make yourself, emotional and crazy about this little move on, I don't know, 5 minute or 1 minute chart. Well, in a bigger picture, you think if I would just get in here and stay for a few days, I would not lose all my emotional capital and I would have much more money, you know?
Absolutely. I mean, you hit on, I mean, that's a great phrase, emotional capital, which I think is overlooked. Yes, obviously, we all do this, to make money. We want to be profitable doing it, but there is emotional capital that you expend as well, and you have to make sure that that's being used wisely. That you're not just burning yourself out or spinning your wheels. And the biggest reward, I don't think, I mean, obviously there are exceptions, but generally speaking, I don't think the biggest reward is going to come by being able to predict the next hour's move, the next 5 minutes. I mean, you can drive yourself crazy doing that. Unless you're doing that in very significant size, I'm not sure that it's going to really be that productive anyway.
True.
Whereas if you see a bigger move in whatever it is, whether it's Tesla, whether it's a currency or whatever, and you're not rushing yourself to make the money within 24 hours and saying, oh, the P&L has to be made by Tuesday morning. If there isn't that sort of time limit on it, I think you have a greater chance of success. In other words, because the move doesn't happen immediately, doesn't mean that it's not going to happen.
That's right.
And because it hasn't happened by the end of the trading day doesn't mean that you should take the risk off either. And so, yes, I mean, that's kind of the place I got to eventually, that literally trading less frequently was much more productive. And then trying to couple that with when I have, less frequently, meaning when I really have strong conviction.
Mm-hmm.
And then trying to back myself accordingly instead of just trading like what the normal size might be if I have like an idea or a hunch or whatever, actually trading over and above that a bit more because I really have a high confidence level and because I know that I've been disciplined and stayed away from a lot of what I would call the garbage trades. If you stay away from the junk, then you have more both actual capital and emotional capital to invest when it counts. And I think you almost feel psychologically entitled to it. You can say, you know what, I've been good. I haven't wasted it on junky trades. I'm patient. This is what I've been looking for. Bang, I'm going to do this. And if it doesn't work, that's okay. If it doesn't work, that's okay. You're allowed to get it wrong, allowed to get it a mistake, if you make a mistake, because if you have 10 trades, provided that the risk reward ratio, which we haven't really gotten into yet here, but provided the risk reward ratio is good enough. I mean, it's not easy, but my preference is to look for 3 to 1.
All right.
If you're looking to make 3 times what you're risking, it's really an incredible figure if you do the math. You can actually be wrong 70% of the time,
yes,
and still make money. So it's not, in my opinion, it's not about being right like all the time. Yes, of course, we all want to be right as often as we can, but that's not the requirement.
Yeah, and that's what actually stands us in a way, right? Trying to be right all the time.
Exactly. And I think this is where, you get into or can get into trouble. Whereas if you're trading less frequently, and then if you're really focusing on those higher quality trades, where hopefully you are going to be making 3 times what you're risking, I just think you're in a much better place. I think the difficulty that a lot of people have with that is that if they feel that if they're sitting on their hands, they might feel like they're doing nothing. They're not being productive.
Exactly.
You know,
The
how can I
doing
stay out
thing,
of the
right?
market? I can't make money if I'm not in if I'm not in the market.
Yes. And this is exactly, you're hitting on the points that they might seem so obvious, right? But are so deep in our belief system, how we achieve success, how we make money. Like we have to do something.
Exactly. Those words, you have to do something.
Yes. Hard work means more money, but in trading is the exact opposite. I like to compare it to fishing. If you go fishing, you just sit there and wait for the fish to come to you. You're not jumping into the water, running behind the fish, right? And you have no guarantee and no idea if you're actually gonna catch something. But once you catch something, then you take action, right? So what I wanted to ask you, from a professional trader point of view, right? Do you think it is realistic to think that trading for a living is actually possible for regular people, like, retail traders, or is it just a dream? Like if you look from the perspective, like you worked professionally so many years, are retail traders being seen as like, what are you trying to do?
I think the way I would describe it is I think it is possible, but I think that it's only possible if you're prepared to take quite a bit on board in terms of discipline, in terms of preparation that you need to do. If you're prepared to take on things like mindset, and I would argue that a lot of people aren't prepared to do that extra work. That to me is the real work.
Mm-hmm.
Like being able to maybe sit in front of a screen and read and learn, do some research, put some thoughts together, and actually not trade. I think to make money, a lot of what you have to do it can sometimes be very unsexy. But I think it's not going to be for some people because of that. In other words, for anyone who thinks that the route to doing this profitably is like, as you suggested, just trading constantly and equating trading constantly with working hard,
Right.
that's not the case. And I think that there are a lot of people who will fall in or fit into that category. So, realistically speaking, I would say probably, for the majority of people, it's not realistic. And when I say majority, I'm not saying that 90% of the people are going to fail. I don't think it's that.
Mm-hmm.
I mean, we all know what the statistics are about spread betting platforms and how many people lose money. But
yes,
maybe a more positive way of phrasing it is that, if you are prepared to have a process and work on improving that process and operate with discipline, both maybe in trading and in other aspects of your life, that's not going to guarantee you success, but that's going to increase the likelihood of success. And then getting back to what we said before is the element of time. In other words, if you have time on your side, if you're able to allocate a period of even years to get good enough, then I think it can work. The issue is that for many people, that isn't realistic. They need income now. They can't just give up their day job and then say, okay, I'm going to spend the next 3 years, barely covering my costs. They have to live, they have to eat. And that's why I think for a lot of people, it may not be realistic. If you can do it in the beginning such that it's a supplement to your income rather than maybe being wholly dependent on it, I think that increases your odds of success. But I mean, I don't think there's any quick route. And that's the other thing. Anybody entering this, if they're looking for a quick route, it's not going to happen unless you have tremendous natural talent. And of course, there are people like that. I think they're the exception.
It happens, right? A little bit of luck, a little bit of talent. Sometimes it happens. But I think the success doesn't lay in the the first lucky trades or the first money you make. It's really in keeping that money.
absolutely right. I think if you're willing to invest in a process of some sort, and that can be your own process or a process that you develop in combination with somebody, whether it's someone like yourself or someone else, that you have a better chance. Because I think success will come from a process that's refined and improved and
Right.
developed over time. And again, a process is not something you just read a book and say, right, here's my process. You know,
That's
just
theory, right? Now you need to
exactly.
practice.
Which it's useful. I mean, it's
Yes.
definitely useful. It's definitely helpful, but it's in the practice. And this is really another anecdote that I can give you. I'll mention his name. I don't think he might be mentioning his name. Oliver Velez is his name, who's been in markets for close to 40 years, and he's all. You're probably worried. There's all sorts of webinars on trading. Anyway, he's got an
Mhm.
expression that in the beginning, as crazy as this sounds, you might actually lose your way to success. And what he means by that is that you make mistakes in the beginning that are unavoidable. They are going to be made because you're not born with the knowledge of trading. You get
Yes.
that through experience. And obviously, as you referred to earlier, it's a case of learning from those so that you don't repeat those mistakes. But just a lot of mistakes that you're going to make in the beginning that I don't care how many books you read, or webinars you watch, you're going to
Yes.
make those mistakes. It's what you do with that knowledge.
Exactly.
Um, and do you have the psychological makeup to deal with making those mistakes and then move on from them? And I think for a lot of people, it's tough. I mean, I think to be fair, I think for anybody it's tough, but some people are better at dealing with that than others. And those who can learn from mistakes and not let themselves get too discouraged by them and not repeat them have a better chance in the end of succeeding.
Totally. I think it's really the matter of taking things very personally. And, that has to do again with experiences that people have and that they are getting triggered on a deeper level. Because a lot of times what I see is that mistakes, instead of being taken as feedback and a way to adjust the course, are being taken as failures and a way to cut your confidence. And if you don't have confidence, your commitment is gonna also get less. Yeah, and without commitment, you're gonna question everything, and then this whole process just collapses.
I think as well that the element of ego is important in that but you'll see this often that people will mention this dealing with trader psychology that when we go to school we're trained to be right, we're trained to get it right 90 to
Right.
100% of the time. So entering a field where actually that's not necessary, it's okay to even be wrong half the time, or even if you might even be able to get away with being wrong more than half the time. That goes against the grain. I think people, it hurts their egos. They'll say, like, how can I have gotten that wrong? How can I get it wrong 3 straight times? What's
Right.
wrong? Why did this not happen in my previous line of work or my previous job or in school? I was always a top student. And, you know, markets are different. It's not just about the percentage of times that you're right. Obviously, that helps, but that's not the only element. I think a lot of times people's egos can get in the way. And so I don't want to do this because, I can't handle being wrong. I can't handle how it makes me feel being wrong, what
Exactly.
being wrong, what that feeling does to me. And I suppose it takes an element of humility as well to be able to say, yeah, you know what? I do get it wrong. In fact, I get it wrong often, but I'm willing to recognize that quickly and not let it build up and fester.
Yeah, and don't make drama out of it, because it's a matter of focus, right? You're wrong many times, but it is not about being wrong. So why putting so much focus on it? The moment that you start putting focus on being wrong, now you're only fighting to be right. So and that brings a lot of traders into trouble. Like if you take a wrong decision and start fighting the market, now you're really wrong. All right, so let's talk about your trading journey. Did you go through the same struggles that every retail trader goes through as a professional trader when you started? Or do those journeys differ, you think?
I think to a certain extent, I did. I think anybody who starts out in trading, whether it's working for a bank or a fund or working, or just trading as on a retail basis, certain amount of tuition that you like, if you like, that you pay just through inexperience. I think by virtue of doing it, through an employer, there were people who I could speak to who were more experienced than I was, who I could learn from, and that ultimately made it a lot easier. And
Right.
sometimes I could learn from other people's mistakes as well. In other words, like I was able to, in different environments, to see, you know, not only what people did that was positive, but also what people did that was negative, and learn, what to avoid. And that was very much a process, and it never ends. By the way, I mean, in my opinion, that's an ongoing process. And I think when I switched to just doing it on my own completely, there was a little bit of backpedaling. I mean, I had to almost sort of like review, and then sort of like almost view myself from the outside and say, okay, I don't have somebody that I can, let's say, necessarily bounce ideas off of, or talk to about this.
Yeah.
What am I doing here that's working? What isn't working? Why? What habits need to be improved, or what habits need to be eliminated? And it is different when you're doing it on your own. And I think it can be, for a retail trader, it can be scary. First of all, you have to have the willingness to want to look at yourself in that way. And that's, some people might not want to do that. They might not want to have to be self-critical.
Yes. Especially if you're starting and you're not entirely even sure how to do it, you know?
Exactly right. And which, that's an argument for, if you're completely new to this, to seeking out some sort of guidance. And then it's an issue of finding somebody that you can trust,
Yeah.
to work with. I mean, I do feel that ultimately, as a trader, whether you're working as a retail trader or whether you're working in a fund or a bank, it ultimately has to be your own. In other words, you ultimately have to come up with your process, your methodology. You can get people's opinions, you can get the feedback, but you can't just be executing someone else's process or someone else's methodology. You can take on board suggestions that they make, but you ultimately have to make it yours. How does this work for me? Do I really believe in this, or am I just doing it because someone else says I should do it? Am I buying this because a very experienced professional who seems to always getting it right is buying it? Or am I buying it because I really believe that it's going up?
Yeah. And
Uh,
I think that's pretty difficult to make that judgment, especially, when you're not sure if what you're doing is right, because you're not making money yet, right? And the second point that you have touched upon, to let someone else look at your process, what you came up with, that requires vulnerability, because
yes,
that is
absolutely right.
pretty much absent in the market, because all you see is all the money that all the money that traders make, right? There's not many people really showing, hey, I made a mistake and this is what I've learned from it. So you kind of keep it to yourself and hope that one day maybe you'll get it.
FOMO, I think, is probably the biggest obstacle, and leads to the sort of negative thought processes, that also might make you less receptive to, having somebody examine your process and say, you need to be doing this better, you need to be doing that better. There's this, as you mentioned, you look and you say, oh God, all these other people seem to be making money, so how come I'm not? Or what do I
Yeah.
need to do to like make that happen? As opposed to like taking a look at the process first, and then refining that to a point that puts you in a much better position to make money more consistently.
Exactly. Yeah. And have you ever questioned yourself as a trader? And in the professional trading world, like, what is a success? Because obviously for a retail trader, like, as long as I make money and I'm consistent with that, so I have some profit at the end of the month, and usually people have some kind of an amount in their head, right? That's success. What is that in a professional trading world?
I think Two things. I would say longevity is one. If you're able to do it over a sustained period of time, I think that's a measure of success, perhaps as much or even more than the absolute amount, that you make. And then I think another measure of success is, are you getting incrementally better over time? And I don't necessarily mean like today versus yesterday. I'm thinking more, year over year, or, can
Right.
you actually see real progress over a 3 to 5 year period, compared to the way you were before. And, I there are many times where I have um, questioned myself over the length of time that I've been in the business. Probably less so in the early to mid years, where I was very heavily involved in market making, and where markets were less electronic. As markets became more automated, and it became, you're more in competition with computers in a way to try to react to news and act
Hmm.
on it, it became a bit harder. Yeah, I think there were more occasions where I might question myself, like, can I still do this? Do I still have what it takes, or to carry on doing this? And that's where you need the benefit of time to be able to kind of evaluate your process and say, okay, some things need to be improved here. I can't just keep doing what I was doing before because the regime has changed. And to try to do that without like being angry about the fact that the regime has changed. Kind of like with mobile phones, when we went from rotary phones to mobile phones, that there was never any going back. And technology is the same in markets. That we were never going to go back
Right.
the way markets were before became fully electronic, and market structure has changed. So that requires changing with it, and it's still changing.
It
I
will
mean,
be changing faster as we talked about it. It's just
exactly,
changing faster and faster, right?
exactly. I mean, and the algorithms get better and better and faster. So ways of doing things that were successful 10, 20 years ago may not be successful now. So yeah, getting back to your original question, I think longevity is a measure of success, and your ability to learn from mistakes. How good are you at sort of recognizing that something needs to be changed and then implementing that change?
And I hear you a lot of saying process. So going back to the process, even when you question yourself and your confidence about yourself, it's going back to the process. It's not questioning yourself as a person. It's how can I do it better? What can I do better?
I think process is everything. I actually think that, not to the full extent, but I think to a certain extent, I think process determines outcome.
Yes, assuming you can follow it.
Yes, absolutely right.
So, for everyone who is listening, I really want you to take those words from Gary very deeply to your heart, because a lot of times what I hear from traders is frustration and a lot of high expectations of the progress. So, if things are not changing or not progressing fast enough, and I'm really talking about going from zero to hero in, let's say, 3 months, which is a long term. A lot of times it's a month or, matter of weeks. You're getting frustrated. As a professional trader, you're talking about improvement over the years. So,
This is it, over a period of years,
yeah,
not a period of weeks or months. And I mean, I haven't really mentioned it so far in this conversation today, but I think something else is to try to accumulate little things that give you some sort of an edge. Whether it's information, whether it's your physical fitness, whether it's your diet, and it just to accumulate bits and pieces, just even as simple as being able to identify sort of what podcasts or what webinars you think are really good, and what ones aren't so good.
yeah,
What's helping my performance as opposed to what is not. It's not just about, okay, trading a head and shoulders pattern isn't working for me. I mean, all right, yes, that's part of it. But process is a lot more than just which chart patterns you use and all that. Process encompasses so many things.
yes. I always think that, and that's what I teach my students. We look at the whole lifestyle as holistically,
Yes.
basically. I'm saying trading for a living is a lifestyle. It's not a job. Yes, it's a business to trade for a living, but it's a lifestyle. And every single element of that lifestyle has to support that performance. It's just like being a professional athlete, right?
I totally agree with you on that.
It's not just going to a gym for 2 hours a day. It's like everything around it has to support those, pretty much few minutes maybe when you are in the trade, because obviously you're not going to be hitting. I mean, some people do hitting buttons all the time, right?
Yes.
Buy and sell. But it is really picking those moments where okay, now I'm absolutely focused and convinced to put everything 150% into that trade. And just like in Olympics, you train the whole year and then you have the moment of your performance, pretty much.
Accumulating like positives or things that can help your performance, and they can come from all different areas.
Totally. You are saying that when you work for yourself, it is easier to stop. But actually, what I see from traders who are still struggling, it is the opposite, right? Because the moment that they step over to, I have to make money trading, they think they have to be there all the time, because otherwise, how are they going to make money? And that detachment is so difficult, but it actually brings them to the attitude of being desperate. And that is never a good advisor in trading, to be desperate.
I completely agree with you. And I think that there's definitely a distinction between, say, literally trading to pay the bills, because that is effectively your full-time job, as opposed to trading as not necessarily as a hobby, but as sort of a supplement to your income. Or they're two very different things, and different levels of pressure. And I agree with you that if you're trading out of sort of necessity to pay that bill, it affects your judgment and can affect your judgment. That's something to take into account when you consider if you want to do this.
Exactly.
Do you have the capacity to wait it out? In other words, while you learn your trade. In other words, it could take you a year or two, maybe even longer, before you're making what I would call meaningful money on your own. And are you in a place to be able to afford doing that and without getting discouraged? Because if you're not in a position to do that, then you are going to be making very pressurized decisions and probably not the best decisions. And I think you have to be honest with yourself as to what you can afford. Do you have the capacity to take the time to learn how to do this properly? Or maybe you don't, and maybe you have to accept that I'm going to do a job to provide me an income, and then maybe I'll trade as a supplement to that, but not rely on it to pay my bills until I demonstrate that I'm good enough to do that.
Yes. And
But
I remember that when I started, and I've read the book, I think it was Trading in a Zone.
yes,
Yes,
wonderful book.
yes, that's that said you need 2 years of income, and everyone was saying that too. You just need about 2 years for savings, just to be sure that you can actually trade for a living, so you don't have that pressure. And I thought that would be different. I'm like, 2 years? This is not going to take me 2 years. Absolutely, it did. It absolutely did.
Well, it's interesting because I've actually come across people in the market, including some experienced professionals who've been in the markets for as long as I have, or longer. I mean, one person that I've come across he's claimed that it took him actually 5 to 6 years, before he got to a point where he felt really, really comfortable with what he was doing. And he since the next 35 years have been very productive. So, okay, yes, he was relatively young when he began the journey, and maybe when you're 23, 24, 25, it's a bit easier to say, okay, I'll take that kind of time because you don't necessarily have children to support and all that. But the point was he had that time and he utilized it and he benefited from it. But I mean, routinely, I've never heard anybody say that, oh, this is something that they just get within 6 months. I mean, of course, there are exceptions, maybe people who just have a fantastic natural talent. But I think for most people, it's time that has to be invested, and not just like passing an exam or taking a course or whatever. observation, experimentation,
Yeah. And, improving too.
seeing what works and what doesn't work.
Exactly. Because if you keep, you can take 10 years, but if you keep doing the same things that don't work, maybe it will take you 20,
I
right?
think this is it. I think, I mean, what you hit upon is I think it's a major piece of the whole puzzle, which is identifying what's not working, but not only identifying it, accepting that it's not working. I think it's difficult for people to do that, myself included, when you use strategies before that historically have worked, and then you encounter conditions that have changed that make the strategy less useful. It's difficult because I think human nature would be okay. I'll wait. I'll stick with the strategy. I'll just wait because eventually the market will return to what was before. But that's dangerous because sometimes conditions never return to what they were. I mean, an example is now. I mean, we may never see zero interest rates again. I mean,
Right.
we're in a very different environment than we were pre-pandemic or even a year ago, and volatility regimes can change. And if you're not willing to accept that, I think you're really setting yourself up for obstacles.
Yeah.
Because not only you're not going to make money, then you're going to draw down, and it's even harder because then you've got to recover just to get back to break even again before you can start money again. And
Right.
but probably, I think it's easier for people to accept that something's not working if they can identify why. If they can say, okay, the strategy isn't working because I'm trading breakouts when the VIX is trading between a range of 18 to 22. And, the chart suggests that when certain levels break, the market should follow through and continue, and fundamentals back my view. But if we're in a very low volatility regime, you know you may have a lot of false breakouts. You may have a lot of situations where, I mean, I think you can say we just had one in the stock market recently where we began the year very strong, even though there were problems that we could all identify, not just the Ukraine, but just and the inflation. There were issues, yet the market kept rising and looked strong, and it was difficult because you'd say, okay, fundamentals aren't great, price action's positive, and it's
But the
difficult.
feeling wasn't there, right? The conviction.
Exactly. Exactly. The conviction wasn't there. And I think part of it as well was that we have been in a low volatility regime prior to the last 2 days. And that was also going to work against the upside breakout. It's difficult for markets to really race either higher or lower, if the VIX is that low. So then you have to ask yourself, okay, what am I going to do? Am I going to keep trading, breakout strategies in this environment? I think the answer to that is probably not necessarily a straight yes or no, but I think the answer to that is probably maybe I'll trade breakouts sometimes, but less often. I'll be more selective in my criteria, lower my expectations about how far, I think the market can go. In other words, make changes either to your strategy or the expectations around the strategy or both. But if you reach a point where it's continuously not working, then I think you have to accept that and say, I'm not going to do this anymore.
Yeah. Having that flexibility to pivot, right? And adjust and be flexible.
I'll give you a great example of that. It's something that I've experienced in recent years, and it's been going on for recent years. I would say over the time that I've been in the business, historically, when you had a major technical breakout and then you had a retracement to the original breakout level, this is, let's say, in the 1980s, 1990s, maybe even the 2000s, that return to the breakout level, original breakout level, would often be an opportunity. It would be an opportunity to add to the position
Right.
again. Like you took some off, you could say, I'm going to put it back on. And you wouldn't hesitate to do that. You just say, wow, this is thank God for this. How wonderful. And you would never think that, actually it's not an opportunity. It might mean that the breakout was false. And because for many years you got continuation, before markets became more mature and more sophisticated and more automated, if you like. And all of a sudden trend following over time became not such a guaranteed strategy. And I think especially, let's say in the last 3 to 5 years, where you've had monetary policies so, really, really dominant over markets, you see this a lot where if a market breaks out and then retraces, most of the time I don't want to re-enter. If it actually returns to the original breakout level these days, I'm not saying that I'll never re-enter the trade, but I would say 7 or 8 times out of 10, I'll say, hang on a minute, there's a reason
Right.
why the market's not following through, why it's not continuing. And an example of that, when we broke above, say, 4,000 in the S&P, whatever it was in January, February, it initially did well, went close to 4,200. I said to myself, if we get back down to 4,000, I'm not going to be so quick to buy that dip because I've seen this time and time again in recent years. And lo and behold, what's happened? We've now gone well below 4,000, below 3,900. And I'm not saying that the market is going to like crash. And what I'm saying is not even in response to what happened to SVB, but just an observation that it wasn't working for me in recent years buying the retracement. So I stopped. I don't do it unless I have a really good reason. If the market retraces to the breakout level and there's something going on in a related market or a piece of news that supports the trade, then I'll consider it. But I'm not robotically doing it as I would have 20 or 30 years ago.
Yeah.
And it's a big change. And it's disappointing in a way.
Of course it is, because it's not predictable and you cannot assume things. But I think this is the part of trading that is so important to realize, that it's all about responsibility, right? Your ability to respond to what is happening, not just kind of go on an automatic pilot, because there is always something different and you just cannot keep assuming things. You're making your thesis, but you have to acknowledge that you might be wrong. It's just like with life. Instead of living on the automatic pilot, just experience what is actually happening and respond to that, right? Instead of reacting to that.
Absolutely. I think it was easier, say, decades ago to like formulate a strong thesis and just kind of stick with that and milk that and hope that it would persist for a number of weeks or maybe longer. But, if you look at what goes on in markets, even before the pandemic, but certainly since the pandemic, the narratives can change so quickly.
Right.
Sometimes in 24 hours, 48 hours. So if you're looking for a sustainable trend, sometimes that's not going to be there. I mean, all right, we had one in interest rates last year because the Fed just were relentless. But I would say more typically in the current environment, trends don't last that long. And part of this, I think, is because of technology in the sense that we all process information so quickly.
Yeah, exactly.
It takes a nanosecond to process it. So it's reflected in prices quite quickly. And I think that's why when prices break out and then fail and return to their original breakout levels, it may be because it's in the price already. We all have access to instant information. We don't need to wait for research reports to be physically mailed to us. We just click and we can read all that we want about what's going on. So I think that changes the speed with which markets move.
And the character of those movements too. But I think that somewhere inside people, there is this nostalgia of hanging on to the old and things being predictable and like...
Yes, absolutely right.
Attaching yourself to it. And that's what is causing the issues to detach and to move on, to just say, okay, no, it's not like this, it's like that, right? That ability to pivot. And when you don't have as a person that agility, but the market pivots all the time, now you're not in alignment with each other. And I think that is causing a lot of issues.
Absolutely right. And I think it could almost be more of a problem for more experienced traders in a way, where it's somebody very young or new to the market doesn't have those previous ideas or the old habits to cling on to. So he or she might find it a little bit easier to sort of change and adapt, whereas a more experienced person would even be resentful about
because people don't like changes.
No.
Right.
I think as well, sometimes, making a pivot means identifying that the previous thing you're doing isn't working. And it might mean that there's a bit of a gap before you find the new thing to replace the old thing.
Right.
In other words, it might not be as simple as you go to sleep out with the old and wake up in with the new. It might not be that quick. You may need some time
Hmm.
to come up with a methodology or an approach that suits you and better suits the current regime. And I think also that might frighten people, anger people, because they
For
might feel like, oh,
sure.
this wasn't supposed to be this way. I'm not supposed to. What do you mean I can't trade for 2 weeks until I figure this out? And
Right. Exactly. Like, how am I going to make money?
exactly, exactly right.
Yeah. Yeah. So, being a professional trader, have you ever felt it? I made it. Because we talked a lot about having success, and traders have this idea of the day that will come at some point when I made it. And I always try to bring over the message day like that doesn't exist, because that would mean that once you reach it, then you can relax and just not work hard anymore. And I don't think it exists in trading. But have you ever had that moment, okay, I made it? Or is there always that uncertainty?
I think there's always an element of, at least for me, there's always an element of uncertainty. Although I think there have been times of my career when I felt like my confidence has risen and my competence, has risen, that I've, through experience, really knowing when to recognize situations better and then react to those situations faster when I recognize them. But I agree with you. I've never reached a point where I've said, like, oh, wow, I feel like I've got this figured out, and that I can therefore allow myself to lower my discipline or get lazy with my process. I say this all the time. I think it never ends. I mean, whether you're 30, 50, 70, you're doing this, you're always growing. There's always room for improvement. And I think it's better to look at it that way instead of saying, I want to reach a day where, I can just turn on the light switch and I can say, I've made it. I mean, I think
Yeah.
that's what you're looking for. I think you're going to be disappointed. Whereas if it's more a case of just an ongoing incremental improvement to your results and your process, you're going to be happier. And I think you're going to do better in the end.
Yeah.
And also accepting that you're never going to fully figure this out. Never. I mean, even the best, you're never, there are always going to be times when you get something dead wrong, even when you thought you had it 100%, properly analyzed. And I think it requires that sort of humility as well, and rationality to say that, that's okay. The goal isn't to be like Lewis Hamilton of trading.
Right. Right. And most of traders who are getting into trading is because they like challenge, because they're ambitious,
Yes.
right? But then the
Yes.
moment they're there and it starts to be difficult, the focus switches to when is it going to stop to be difficult?
Exactly. I mean, like, can you just embrace the fact that it's not just going to all of a sudden become easy? Can you just take that on board and say, okay, it might get a bit easier, but it's not going to become easy. And I'll tell you why it won't become easy. It won't become easy because conditions are always going to change. And that, I think, is part of what makes it challenging and difficult, is that regimes change, conditions change. And I think now faster than ever, because of what I said before, because of the availability of information, narratives and trends are changing like at lightning speed compared to how they did before. So you could find yourself maybe making some money in the early part of the week, but if you're not careful to sort of recognize a shift in the narrative in the middle of the week, or the latter part of the week, you could end up giving a lot of that money back.
Yes. So what do you enjoy about trading?
I think the what you said, the fact that it's a puzzle, that you're all, and you're trying to put a lot of different pieces together, and that it's not easy, if you like. I think that's what you said, a challenge. It's almost like it's going to sound strange, but like with being with a woman who challenges you, who's complicated and not whatever. Just,
yes, and I love that analogy, because I always say, don't be easy. Just don't be easy. Be a little bit difficult. Don't be desperate. Just let the market convince you.
Exactly right. In other words, that's a good way of putting it. In other words, let the market show you something that warrants putting the risk on.
Yes. Yes.
It's nice also when you're proven right. I have to admit that it is a very rewarding feeling if you have an idea, even if it takes time to be born right. So that I guess probably the other thing is it never bores me. I've
Mhm.
never, after doing this for all these years, I never get bored of it. There's always something different. The fact that there's so many things moving markets, whether it's politics, economics, technicals, and I like that. And I feel privileged in a way that to do something that I find interesting.
It's like being in a relation in a honeymoon phase for always,
Yes,
right?
yes, it is frustrating at times, but on the whole, certainly never bored.
That's
Very
great.
grateful for that.
Well, that brings us to the end of the episode. And thank you so much, Gary, for joining us and for this candid conversation. I hope that it will help traders who are listening to this to gain some perspective and understand that trading is never ending story. It's not once done and that's it. It's every day putting effort, putting focus, and that's also what makes it so exciting.
Yes, I agree. I thank you so much for having me. I really appreciate it, and I hope that you are able to communicate, with the people you work with and help them in their journey to develop. And you've made a lot of points here, so hopefully people will pick up on that.
Thank you so much for joining, Gary. Thank you so much for listening to the Confidence in Trading podcast. If you enjoyed my show, please rate and review it on Apple Podcasts and be sure to subscribe so you can come back for a real life conversation in the next episode. Until then, this is Agnieszka Wood from Ahead Coach, and don't forget, you too can realize your dream without losing yourself and your confidence in the process. Thank you so much for joining us today. Thank you.